Brij Bhushan Agarwal, the Vice Chairman and Managing Director at Shyam Metallics and Energy, joins us now to discuss the impact of that. Mr. Agarwal, good morning and thanks for joining in. The steel prices have been under pressure for a while. We understand that in September, the steel prices fell about 1,500 to 3,000 rupees per ton compared to the start of August. So that's a steep fall. Can you tell us on a blended basis what is the reduction in steel prices that we've seen up until now and what is the expectation?
See, during the second quarter, all these steel commodity prices generally go with a correction because, it's a monsoon time and, there is a lot of issues of the waterlogging, logistic disruptions and all, slowdown in the construction activity because of rains and all. So I think 2,500, 3,000 rupees ton is a very, very, normal thing which we have always seen in all the second quarter during this August, September because of the monsoon. But I would say on an average, if you see from the peak, I would say 7 to 8% in the long product, there had been a correction on the steel prices in the long product, and the demand of the long product is not that bad. I would say till now we have not cut down the production. We are able to sell the material, but yes, there is a pressure of price. And I think, post November, we will see the market getting firm. And also, I don't see any other corrections. I see this is a bottom out on the price side.
Quantify the kind of correction from, say the first quarter average realization to the second quarter so far. What has been the decline? And now that you're saying it's bottomed out, could you comment on the trajectory going forward?
See, if you see, there has been a major correction from the peak time. I mean to say, if you're talking from the peak time, it's almost second and the third quarter of the last year. But from the first quarter onwards, I would say there is a correction of around 3,000 to 4,000 rupees a ton. So, and since there is a lot of prices on the raw material is not getting so much, reduced. And today, I don't see that like with the kind of demand what we are seeing in the long product. I don't see that the market is further going to correct.
So you said 3,000 to 4,000 rupees a ton is the fall that you've seen now compared to
the first quarter.
Q1. Okay, that's a lot. So what does it mean in terms of your EBITDA per ton? Because in Q1, your EBITDA per ton has fallen quite a bit. You're sitting at about 13,300. You were at one point in time almost at 19,000, 20,000. How much could it fall further?
So on an average, like today we are talking of 3,500 ton is the September time. But if you see the average of the quarter, I think we should be able to see a correction of around maybe 11,500 to sum up on the EBITDA numbers.
So that's for the annual EBITDA per ton sort of guidance that you're talking about, because the first quarter you've done around 13,300.
Correct. I'm talking of the second quarter.
Second quarter, 11,000 to 11,500 per ton is the EBITDA. Thereafter, would you have any visibility, or you would wait for...
I don't see this is bottom out, I don't see like, I see a market going upward only from here.
What makes you so optimistic? I mean, domestic demand, could you comment on that? Interest rates have risen, and exports, which is about 12% of your revenues, we saw a lot of problems there as well, European demand, etc. So could you give us a sense on demand of for both domestic and exports?
See, if you see the domain of Shyam Metallic, it has been always majorly on the rural sector, and we know like a lot of development is going on in and around the country, a lot of, projects of the government, as well as, after the revival post-COVID, we are seeing a lot of demand is coming up in the private sector, real estate and other businesses also. And since it is not a product which we have to import, and the product where we, it's more governed on the market and the raw material prices. And we are domestically, I've always said, we are not dependent on the international raw material, like we are on the pithead, from the iron ore side, and we buy a lot of local coal from Coal India. So, in that way, maybe one quarter or maybe 1.5 quarter, we see some kind of margins going down because we have to carry over the inventory. But in the longer time, if we see that, it's a very, very sustainable EBITDA of 11,500, 12,000 rupees a ton. which we should be able to maintain it.
Okay, so sustainable EBITDA per ton is 11.5 to 12,000. That's much below what you've seen in Q1 of last year and in Q4. So while there is margin pressure, there's EBITDA pressure. Let's talk a little bit more about demand. You did mention that demand for long steel products has gone up quite a bit. Would this mean that you are going in for any expansion plans and any capacity that you have coming on stream in the second half of the year?
We have already commissioned 500,000 ton of long product facilities. And as you know, we are penetrating more on B2C space. So, with a better marketing strategy on the B2C, the consistency and the reliability on the supply and the price both is, much better. And the new expansion, what we have done it is on the long product B2C businesses. And in the time to come, we are seeing this business to be very stable for a country like India.
Right. What's the capacity coming on stream in the second half? Is there any? And expansion plans, how much of money has been incurred so far? What's remaining?
See, out of our total capex of around less than 4,000 crores, around 1,900 crores have already been capitalized. And this year we expect to capitalize another 700 to 800 crores this year. And when we are talking from the plant side, yes, all the streams, what we have stated, the DRI facility, the specialty alloy, and the blast furnace, everything is going on as per stream. And we expect that, the pelletization facility also, the new facility of 2.4 million ton, what we have stated that will be commissioning by August, September 23. We should be able to complete maybe by end of this financial year or maybe early financial year. Yeah.
Okay. Any buyback that's possible, because you are sitting on a net cash on your books. I think you have cash to the tune of about 500 crores. Planning a buyback anytime soon?
See, as on date, we are under the SEBI guideline that we have to dilute 25% stake, and we have done 11.5% in our IPO. So at present, there is no such scheme. First, we have to reform everything as per the SEBI guideline, and maybe with the time to come, once we are done with all our regulations and all, we might think later on, but not at this point of time.
From the peak, we've seen a near 30% correction in the stock price. When will be a conducive time for you to dilute the stake further to 75%, as you said?
This is too early for me to state, because we have, 1.5, 2 years still. And when the time will come, since this company is also not in the dire need of cash, all the new capex, what we had planned is from the internal accruals. So maybe, after 6 months or maybe a year time, we might evaluate, but not at this point of time.
All right. And final question then, with regards to input prices, what was the blended price of coal in the first quarter? How did it pan out in the second quarter so far?
See, in comparison with the first quarter, we saw second quarter, I think, maybe around 1,500 to 2,000 rupees ton, the carbon prices will go up.
Okay, we will leave it at that. Thanks a lot for joining in and giving us an update. There was quite a bit of information